Hey everybody, this is Paul doing a quick video on the kind of the middle of the month here. Just going over my thoughts on the market. I think it's a better idea to just kind of do a video on the 1st and the 15th since the markets swing quite a bit uh, depending on how everything's going. I mean, I can make a video every day it seems, but just wanted to make a quick video, just kind of state of the portfolio, what I'm doing in the market right now, where I think it's going, and yeah, just kind of just craziness. I guess the whipsaw, if you want to call it that. But it's very strange. It's the market's acting like it's in a bear market, which means it's down, I believe, about 15 to 20% in some areas. But the economy, when you look at the jobs report and all that, all the indicators are pretty healthy. But the consumer sentiment, University of Michigan, is way down, like way down. But that could be infected by, or affected by just the price of gas. But that's also something that's also completely crashing right now. You're not seeing it at the pump, obviously, because it takes forever for it to show up at the pump. So yeah, there's a lot of stuff going on. So I guess so. Let's just look at the portfolio where we're at. Um, Last time I did one of these videos, I was at 55,382. Now I'm at 53,623. So pretty much like every other YouTuber. I've seen some YouTubers that took an 18% hit last week. I wasn't quite that bad, but I think that's like what 2% or something like that. Um, yeah, 3% in a week. So yeah, some YouTubers I saw took 18% hit, which was pretty large. Not even sure how they pulled that off, but I guess it's possible. But let's see what we got here. So it's kind of the market's just kind of doing what it's doing. So there's just this Ukraine and Russia thing going on, just causing a lot of issues with oil and rates are. It's yeah. There's a few things. So like you got oil going on at one time. You got wheat, which is another thing that's going up because of the Ukraine and Russia thing. So these two are directly related to each other. Then you have at the exact same time the Federal Reserve, which is meeting today. Everybody is either expecting either five rate increases this year, six rate increases this year, seven rate increases this year. But because inflation is so high, because oil is so high, but now oil is pulling back, the market is definitely whipsawing a lot. There's a You normally get some things that pull the market in different directions. You're getting some very, very big things that are pulling the market in directions almost daily, and it's impossible to trade. If you try to trade this, you're just going to lose money. You have to be a psychic to be able to trade this. The only thing you can do, that's pretty much what I'm doing right now, is if I see something dip, like one of my core stocks, man, this is what I call my core portfolio right here. My core portfolio. I added PPL back in because I needed something that paid out in April, but it's very good. It's a utility stock. But if I see something dip, I'm just gonna add a few shares here and there, like 25 bucks or something like that. I might take like little profits here and there, like maybe take a little bit from Walmart, which only has a 1.56% dividend yield, and I'm up 10%. Take some of those profits, maybe like $500 of it, and put it into one of these other ones, like Kimberly Clark, or if I get a tax return or something like that. But that's all you can do when you're kind of in this situation, because it's just what the market's doing right now. It's pricing in these really just worst case scenarios, like worst case that could possibly happen. But now that you're looking at oil, if you go to the 1 month alone, it's back to its baseline. So it's almost like the war never even happened. Like it never even happened. Now look at it. So in theory, gas, so for example, went up to 419 almost immediately on this day. On this day right here, it should go back to where it was, like maybe three something, but It takes longer. There's a lag effect, but you can just kind of see it. It's almost literally back to where it was before the whole Russia thing even happened. It's almost like it never even happened. It's so strange. But they price in the worst case scenario, this massive amount of oil supply getting taken off the market, and then it doesn't actually happen. you know? So, yeah, that's kind of what happened there. But as it stands right now, the only thing I'm doing right now is if I see a position down a little bit, I'll try to add something to it if possible. One share at a time, here and there, like an AT&T share or something like that. So here's where we are for dividends. It says 29.74 as it stands right now. I got some stuff paying out tonight. VTRS is paying out. Unilever, BST, BSTZ, this one right here. So I have about 167 worth that needs to pay out, and then 207. But if we look at this number from the first, and this actually will give you a better picture. So on the first it was 3115, now it's 3205. So you can kind of get a general idea of how I've been moving money around and up the dividend amount. Um, Even though this amount's all over the place, but I try to think longer term, so this doesn't really bother me at all because I don't have to pull this money out for any reason. So it's kind of like, I have time to recover 10%. This is nothing. But yeah, the market's very, very whipsaw. My only recommendation is if you're going to invest, just invest for the long term. It's going to get pulled even more. Come tomorrow, we should have a much, much better idea of this right here, this whole section right here of bonds going on, because right now the bond market is just a mess. It's with there's no guidance from the Fed really at all. So this market is getting pulled in every which direction. And there's a few things that are going on. Right now, the interest rate on the 20-year is higher than a 30-year. That's not good. The interest rate on the 7-year is higher than a 10-year. And if you look at the 10-year, 2.112, and the 2-year, 1.81, that's about 30 basis points. So it won't take much for this to go up higher than that. So the Federal Reserve has to do what they call thread the needle or whatever you want to call it, where they try to keep this from going above that, because that'll really just take out the banking sector. And then that's typically your big sign that you're going to have a recession. So tomorrow, we should know the exact amount that they're going to raise rates, which everybody expects would be 25 basis points, which is 0.25. And then they should give more guidance on where they think the rates are going to go for the rest of the year. But yeah, so we'll have to see. So this market right here, what's going on here, this could be just a complete head fake. So I'm trying not to pretty good gains for a day, but you got to kind of think longer term. So if I would have made this video yesterday, this would have been down 365, I believe, at the end of the day. So that's kind of one of the things I've been able to do is kind of miss out on the very large losses because I wasn't exposed to tech for so long, but now I am exposed to tech, so I am taking the downside. So this is just a good way to look at it. So if you go year to date, I'm still technically outperforming, beating this right here, but you can see that the YouTubers that had heavy tech exposure, you can see it right here. There's this. There's that. And then we go out to the 1 year. And then all of a sudden, really beating. And go out to the 2 year. I never expected. So you go out to a 2 year, you get a better thing. And if you go out to a 3 year, you kind of get a general idea how long-term investing works. But you can see that the NASDAQ is coming back down to where the rest of these were. And when they say that rising interest rates are like gravity, I mean, this is literally what they're talking about. And this is a good way to look at it. Like when they say that interest rates pull down the market, they're not kidding. That's these are like Warren Buffett said that it's like gravity. It pulls down the market, and you can see it literally pulling down the market back down to earth. So all those guys that review those charts and are just like, these prices don't make any sense when you look at the charts, these long-term things. But when you start getting interest rates that are going up, the ability to finance cheap debt goes away, and now all of a sudden you got over 1 year in the Nasdaq. If you didn't take profits in the Nasdaq in November, like, look at that. If you didn't take profits, you're just negative. That's why I don't like investing in the Nasdaq. I'll take BST and BSTZ because they pay a dividend because of the way they do the call options and all that. But that's why I don't like tech stocks. Never have, because you can get this right here. You can literally just lose a year's worth of progress and have nothing to show for it. If you like buy and hold on a tech stock, it doesn't make any sense. So, but that's where we're at now. One thing that we do have going on, so let's see some little red flags that are out there. Obviously, bonds, the chance at a 10-year and a 2-year invert, which would be kind of a recession signal. Uh, China, look at this. This is crazy. Look at the 1 year for China. Look at that. It's 5 years. Yeah, 5 years. I mean, you have to go all the way back to, I think it was what, 2016 or something like that to get back to these levels. But yeah, their wealth has just gotten. They have like COVID lockdowns, and they also have the possibility of sanctions because they're kind of friendly with Russia. But you can kind of see their thing going on, and they're getting hammered too. So yeah, that's certainly something that's causing some issues. So we just have to keep watching it. It's going to depend on the whole Ukraine thing. I think the Ukraine thing will be done in about a month. Russia's going to be pretty much bankrupt next month, so they'll have to pull out by next month. I expect the market to have a good rally on that. Also, if we get good clarity from the Fed, so is it 5 rate hikes this year? Is it 6 rate hikes this year? Is it 7 rate hikes this year? Also, how many rate hikes do they see next year? That's going to be major. That's going to be really major. Um, you know, they have to give the bond market some kind of guidance. You can't just keep having this thing where it just these massive moves in the bond market. It's just not normal, and it causes havoc in the regular markets. So we just have to see how the market's going to do. But it's definitely going to depend on the Fed meeting. Um, if it's all priced in, you could see a rally into the end of the month, a pretty significant rally, because that's what happened before. They had that meeting in December, middle of December. The market sold off all the way from November 12th up until December 15th. And then from December 15th until December 31st, the market just went on like not the tech market, but the other market, like the value stocks and all that, like these kind of stocks just went through the roof and made like a tremendous amount of money in December right here. This right here was pretty much in the last few days, last 15 days of the month. It did this, just massive 8% increase. So could we see that again? Possibly, but we'll have to see how it goes. But that's kind of what I'm watching. Like I said, the only thing I'm doing right now is every once in a while I just add a dividend stock and then try and put this portfolio on autopilot, make it a pure dividend portfolio where it just pays out dividends and then don't have to really sell anything, don't have to touch anything. There's a lot of stocks in here that are at very low prices that I would love to just buy just large amounts of right now that I know are really, really good companies. Like Kimberly Clark without a doubt, Johnson and Johnson without a doubt. Pepsi's down, P&G, I would love to add out much as that. Unilever, Verizon, like Walgreens, like some of these stocks are just really, really good prices right now. So, trying to add whenever I can. It is a stock picker's market. Just be careful what you get exposure to. I wouldn't get any exposure to China, and I definitely wouldn't get any exposure to the meme stock stuff because the meme stock stuff was just ridiculous. Like when you have AMC trying to invest in like a gold miner, you just like I don't even know, like they're off the deep end with whatever they're doing over there. So yeah, just let me know what you think. I'll do another update on the first, and we'll just kind of go from there. Thank you. Have a nice day.